Awesome. Thanks, Bobby. Nice to meet everyone. Thanks for joining. My name's Justin Kozak from Founder Shield. I'm an executive vice president here. I'll get more into who we are, but quick overview. We're an insurance broker that focuses on early stage high growth companies, most of which are venture backed or looking for alternative forms of capital raise. So hence our partnership and relationship with Founders First and Casey and his team here. So today we'll dive into some insurance stuff. It's not the sexiest business, but I'll certainly try and make it as engaging and interesting as possible. And there'll be some tie into growth, what you should be thinking about as you kind of move into that trajectory with your company. But Casey, I'll let you introduce yourself as well.
Yeah, thanks, Justin. My name is Casey Estrada. I'm the managing director of investments here at Founders First. So many of you are familiar with our programs that we offer at Founders First, that are intended to help your business scale. Right, we're creating growth plans, talking with mentors, providing all these programs that are going to help you grow. My side of the organization provides direct access to capital. So we work with many of our portfolio companies to be able to provide the capital they need to grow. And one of the things that we look for when we're funding businesses is how they're thinking about managing risk. What does their insurance look like? How are they covered if things can go wrong? These are all things that we consider as we're evaluating a business for funding. So a lot of times what Justin is offering can make or break a deal, or be able to help us provide an additional level of capital. So we're really excited to have Justin here. We know that their products are a really good fit for our member companies. So I'm excited for him to be able to share more about Founder Shield.
Awesome. Thanks, Casey. A little bit delayed getting to the intro slide here, but here's our faces. We'll have our email addresses at the end of the presentation. If anyone wants to reach out and chat a little bit more. But moving past this to get started, Casey and I were talking, and Casey will jump in here and there, but to keep it rolling, natural first question that a lot of companies have when I'm thinking about insurance, where do I start, right? Insurance can be complicated, especially commercial insurance. This is not like buying insurance from Geico for your car and your home and you bundle it together and you name your price with Progressive. They're great companies. But when you're building a high growth company that's doing something innovative and potentially complicated from a risk perspective, it's a little bit more complex than that, right? And that's why we exist. That's why other insurance brokers exist, to really guide our clients and make sure they're thinking about it the right way and approaching the market in the right way to get the right solution. So I always like to start with kind of a risk management 101, right? What is insurance? What types of insurance should I be thinking about as a business? And it really is different from company to company. So we kind of break it down into three different buckets here that you can see: physical exposure, employee exposures, professional exposures. And what I'd actually add to professional exposure is what's called management exposure. So on the physical side, this is probably really understandable, but you have a customer that uses a product. If you're a consumer goods company and gets hurt, you have a facility, you have an office space, you have some sort of premises that somebody can get hurt on, and also ensuring your business property, right? You have assets, it might be in an office, in a warehouse, inventory, whatever it might be. That's on the physical side of things, and where we should start thinking of, can somebody get injured? And what assets do I have that are tangible and physical that I'd like to insure? On the employee side, and this is also probably pretty easy to understand, workers' comp, everyone's familiar with it. It's legally required. More important for companies that are a little bit more gritty, hands-on, again, warehouse type of risk, boots on the ground type of risk, rather than someone like me who sits behind a computer most of the day. I'm not going to get hurt. Employment practices liability, you might not know what this is, but you actually do. This is in the news all the time. It's a very trendy thing for news outlets to report on these days, and there's good reason for that. But employee suits for things like discrimination, harassment, wrongful termination, stuff like that. And then crime coverage, which we can dive into a little bit more. Not exactly like it sounds, but your employee steals from the company or falls victim to something like a phishing scam or a fraud scam or something like that. But it's more employee centric. Where does the risk lie with what they're doing with money, who has access to it, who has the capabilities to move money around. And then professional and again, management exposure says more what you actually do as a company. Do you offer a service? Maybe it's a software as a service. Is there a mistake? Is there a failure of that product? And then on the management side of things, and this is probably where I'm going to focus a lot of time today, is how are you running the company? What's going on behind the scenes? What are you communicating to investors, possibly to regulators? What is the board doing day in and day out to keep the company moving in the right direction? There's a lot of exposure to that, not only as a company, but as individuals running the company. It's probably the most common policy our clients buy is high growth companies looking to raise capital. And then also you have cyber coverage, which everyone should be somewhat familiar with data breaches, again, a lot of the times publicized. So we really try and simplify it at the start to think about it in those kind of buckets. And then we break it down, and we're really hands-on with our clients to kind of building a roadmap going forward. Another thing to think about Insurance 101, where do I start, right? What are kind of the milestones and catalysts that need to happen in the growth of my company when I want to think about, do I need insurance? When you open the doors on day one, do you need insurance right there? Probably not. We have a lot of clients that are in research and development. They haven't commercialized the product yet or a service. Not much third-party exposure there related to what they're doing, but maybe they're raising capital, or maybe they're hiring employees. There's lots of different catalysts on different timelines for every company. So asking these kind of questions will allow you to understand, what do I need and when do I need it? And allow your broker to understand your business and your trajectory a little bit to guide you in the right direction there. So as you can see on the screen, some of the questions, like I said, when are we introducing products? When are we going to commercialize them? If there's something like a tangible product, am I signing a lease with an office? Do I have that exposure from a premises perspective? When am I going to collect information, right? Cyber risk. Are we raising capital? When are we hiring employees? Or even something a little bit more complex, like, do I have IP? Do I have a patent? Do I have a copyright, a trademark? There's intellectual property insurance for that, right? So building that roadmap with your insurance broker is really important. And we like to do that from an early stage with our clients. They're not going to need everything right away, but we want to kind of get our hands around, what's the business? Where are you at right now? Where do you expect to go in the next 12, 24 months? And build that roadmap and help them manage it so that nothing slips through the cracks. We don't forget something. We stay on top of kind of those triggers to consider coverage and work with the client to kind of build towards that. So understanding not only the baseline of what insurance is, but when do I need it, right? What's happening with my business to kind of trigger that. And then the last kind of Insurance 101 is, again, talking about the catalyst of buying insurance. Every company is going to run into this at some point, but being required to buy it, right? And we will help our clients understand what those requirements are, how significant they are. Are they realistic? Are they excessive? Does it make sense for you right now based on exactly what the contract is, what you're doing with that potential client, and what they're asking for? So it could be something from a client. If you're a software company, they're going to ask you for tech coverage on the professional liability or errors and omission side, cyber coverage for data. And you kind of see ... tech on the next box, health tech, insure tech, ed tech, right? Similar type of stuff. If you're direct to consumer, right, we're talking about possibly tangible products liability. If you're something like a shared economy or an on-demand company, maybe auto insurance is in there. But understanding what the requirements are, what they mean, can we negotiate any out? Can we negotiate those limits? Are we ready to buy this insurance? We don't want to allow a contract to kind of dictate kind of the path we're on building an insurance program. Now, sometimes that is the case. You need to sign the deal. Maybe they're not flexible, but we want to kind of understand all aspects of it, because as you are a growing company, as you're building up to the point where insurance becomes more and more relevant, does this make sense, right? We don't want to hinder the growth of your business. We also don't want to purchase unnecessary insurance products that could be a drain on a budget or something like that. So that's what we think about in an early stage when we're talking to clients early on. Let's understand the basis of insurance. Let's understand your roadmap for the growth of the company. And let's understand if there's anything that's going to kind of force your hand to look into insurance and how we can support you in making sure it makes sense. I don't have the chat box. And Casey, if anyone throws a question there, let me know, please.
Yeah. Actually, I just wanted to highlight there's a Q&A box at the bottom of the Zoom window here. Feel free to add your questions as we go. And then as they come up, I can either, have Justin answer those, or we'll definitely save some time at the end to go through those questions. So, add your questions as they come along. The other thing I want to point out, tons of good information in this deck, Justin. I'm sure we can send this out afterwards. We do have the list of attendees, so we'll make sure that everybody has access to this information too. And then lastly, I just wanted to point out, as I was thinking through this, Justin, a lot of times what happens when we're looking at the financials of a business, we'll see, maybe this really large one-time expense, and we'll have to ask this, like, what is this? And it'll be like, oh, this was something we had to pay out of pocket. We learned our lesson, and in the future, we should have been insured, and that would have been able to cover this large expense. A lot of times, those things get in the way of funding. So, I think that having these conversations as early as possible are really prudent.
Yeah, they absolutely are. And again, if it's not us, and I'll tell you a little bit more about who we are, there are other good insurance brokers out there. I think, we're happy to let you know what kind of value add and differentiator we bring, but whoever your insurance broker is, talk to them. It's a conversation. It's worth having. It's worth spending the time on and being kind of prepared to avoid something like that, Casey, right? So it always starts with communication, for sure.
Definitely. All right. So, thinking about our portfolio companies and those in attendance here, many are constantly looking to raise capital, and maybe that's just a small friends and family round. Maybe it's more institutional, convertible note or something like that, or even going out for bank debt. We do have a lot of companies that are going for larger equity raises as well. But for all of those businesses, how does raising funding change their risk profile?
It's a really good question. And again, based on the nature of our client base, we see it a lot. It's actually one of those catalysts that pushes a company to buy their first insurance policy. In general, might be the first requirement that they see when they're speaking to investors or other sources of capital. It does change the risk profile in a few ways. One is from the company's perspective. You're raising money. You're going to get more aggressive with growth. It could be marketing. It could be hiring a sales team. It could be developing new products, right? So a lot of times what I like to think about there is potential risk. Are we going to violate a regulation? Are competitors going to have a problem with what we're doing? I'll get to investors in a second, but the risk profile, in my opinion, changes because raising capital typically means that we're going to the next stage of growth, and we might be changing our strategy a little bit. We might be getting more aggressive. What this policy is, and you see it on the screen here, it's called directors and officers insurance. So I mentioned that's management liability. How are you managing the company? We'll get into kind of the more fine print details of this policy in a second. But higher level, it's a little bit agnostic to most kinds of companies. Doesn't matter if you sell a tangible good, doesn't matter if you're a software company or a marketplace platform or just a traditional accounting firm, maybe. This company is going to be how you run the business, right? What decisions are being made to grow the business? And what that could impact is exposure to competitors becoming disgruntled due to unfair trade practices or stealing trade secrets or poaching employees or something like that, right? It has nothing to do with the service you provide. It's the decisions you're making as you run the company. So regulatory side, not every company is subject to heavy regulation. Obviously, if you're a public company or in the financial services sector, you might have more exposure to something like the SEC, but other companies do as well, right? There could be regulation in the healthcare space. There could be regulation around government contracts if you're a software company getting involved in that kind of thing. That is an example of a regulatory body. that could come forward and say, it doesn't matter what your product or service is, you're making these decisions to run the company in a certain way that may or may not impact your client or customer, but we have a problem, right? So directors and officers coverage, we'll get into more about exactly what it is, but it not only protects those individuals, it protects the company as well. So as you raise funding, I think that just the nature of that and the next step of your business increases your exposure to those kind of things. Now, the core of this coverage, however, and this is where the risk profile really changes, is now you have exposure to investor lawsuits. I mentioned public companies before. A public company is the highest form of D&O exposure you can possibly have. D&O short for directors and officers, because the public is their investors. Anybody can realistically invest, and there's huge risk of class action lawsuits. We see those in news articles all the time as well. But typically what we're protecting against for private companies is very similar. However, it's to your shareholders, right? And typically what that is going to be venture capital funding. It could be other forms of funding. But as the board makes decisions and the C-level makes decisions, do the shareholders become disgruntled? Do they think you lied to them? Do they think you misused capital? Do they think you made decisions that weren't necessarily good for the business or overly risky, or by it impacts their investment? Now, the key here, and this is another way that the risk profile changes, not only does that new exposure exist to those kind of investor lawsuits, but now you also have exposure personally as leadership of the company. It's not just the company being insured. Like I said, the individuals are insured. This lawsuit, you're not shielded by the corporate veil. A shareholder can point fingers at a specific C-level executive or somebody on the board and blame that person where their personal assets could be put at risk. This policy will protect you as an individual. So as you raise capital, and we talked about requirements a little bit. Typically a VC or someone else providing capital might require this coverage for a variety of reasons, which I'll get into. But you should also be seriously thinking about it, because whether you're a serial entrepreneur who has made a bunch of exits and built wealth, or you're trying to go down that path and build that for yourself with what you're doing in your life, those assets and that future can be put at risk because you're sitting on a board or leading a company that now you have shareholders. So the breakdown of how the policy works. I'm going to work backwards here. So clause C, what is also referred to as side C, is coverage for the company. Call it balance sheet protection if the company is pulled into a lawsuit from a competitor or a regulator or something like that. It will protect those assets on the balance sheet, which is great. Side B is where the individual protection comes in. Now, the way it works is most, if not all, company bylaws will require the company to indemnify an individual director or officer if they are sued for working in their capacity as a board member or C-level executive or whatever it might be. Side B is reimbursement to the company for that indemnification. I'm sued, Founder Shield indemnifies me, Founder Shield files a claim and gets paid back by the insurance company. There's a deductible like that for that with most other insurance companies, because ultimately the insurance is being paid to the company. Now, side A is where the real coverage starts for those individuals. In the event the company is insolvent or bankrupt and does not have the capital to indemnify, side A coverage will step in and pay that individual who's being sued directly in the pocket, subject to zero deductible. The individual will never be penalized if the coverage is going directly to them. So that's kind of how it flows through a D&O policy and what is covered when. And again, the intent here, and that's why side A is that true individual protection. That was the first form of this coverage. Side B was created, side C was created, but the original form of D&O coverage is truly intended to protect those individuals. And that's new for a lot of people, right? You may have worked for a different company who bought cyber insurance. This might be your first time raising capital. This might be a foreign idea, but understanding that your personal assets are at risk, it's a very natural insurance policy to buy for companies who are going through that process. Actually, I'm going to go back real quick. So, Casey, you mentioned, financials, you guys review them. And I mentioned side A coverage typically kicks in when there's something like insolvency or bankruptcy. The underwriting process, I probably should have put a slide in about this, but underwriters are not going to underwrite based on the size of your board. They might evaluate the level of risk based on how much money you're raising, right? The more capital that you're raising, the more potential investors there are, and the higher likelihood of a potential lawsuit. But what they are going to look at is your financials. They're going to look at the balance sheet. They're going to look at the P&L, understand what your burn rate and your runway is, understand assets versus liabilities. They want to avoid a situation where there's insolvency or bankruptcy, because when you lose money, investors become disgruntled and they start pointing fingers, and that's where a lot of these lawsuits come from. So they want to see, a lot of companies are in the red. That's no problem. Underwriters understand that you have to spend money to make money, but understanding what that runway is, right? If we're net negative, do we have a runway to last another 12 or 18 months as is right now? Do we have enough assets to cover our obligations and liabilities? They're going to look at that kind of stuff. Now, I'm sure that's what, in some way, shape, and form, Casey and his team might be reviewing as well. And underwriters not entirely different, right? They want to understand similar things about the health of the business. But as you raise more capital, that only helps. They're not afraid of more shareholder exposure or more investors. As you raise capital and you put more assets on your balance sheet, it extends your runway. It helps if there is debt or other obligations and the liabilities on the balance sheet. It makes you more attractive, right? So it not only, raising funding is not only usually a catalyst to buy this coverage, but it actually helps get more competitive terms. There's a lot of reasons to raise capital, but understanding that, right, it's a natural way to put yourself in a position to consider this coverage. It's also a natural way to make you more attractive to underwriters. So a little peek under the hood of some of the stuff that they're looking at there.
Yeah, that's a great point. Even in our process, you touched on that. We're all digging into very similar things here. Just to set you up on this slide, as I was reviewing the presentation ahead of this webinar today, this really got me thinking. And every single business these days is storing customer data, right? This means that there is personal data out there at risk, and not every business thinks about this because maybe it's not a big part of their day to day, right? Like an accounting business utilizes cloud storage and customer data in a different way that like an auto mechanic might. But all this data is stored somewhere, and so businesses should be thinking about the risks that come with storing sensitive data. So cyber claims, obviously, some of the most publicized. We hear about it all the time. What can insurance do, and how do I respond to a breach?
It's a really good question. And I actually love the way you phrase that question, because specifically for insurance is meant to protect you, right? You're sued. I file a claim with my insurance company. They defend me. And if I'm settlement, damages, whatever it might be, it's there. That is the case for cyber insurance, but it actually does a little bit more. To knock out the first part, third party insurance, right? You are subject to a third party in this claim. It could be a lawsuit. It could be a regulatory violation for privacy regulation, HIPAA if you're in the healthcare space, whatever it might be, right? There's action brought against you if you have a data breach. It's like every other type of liability insurance. You're being blamed, you're being sued. On the other side, however, is where I actually really love cyber coverage and what it's become. Cyber coverage was really hard to get like 20 years ago or something. It's really expensive. It was pretty basic. And as more and more companies needed it, and now, like you said, Casey, every company pretty much should have it to some extent. There has been more underwriters creating policy forms and competing with each other and building them out to be more and more comprehensive. The first party coverage is a good example of that. And the way I like to explain it is first party coverage gives you a number to call. It's not just insurance. It's, hey, what the question was. I just had a breach. What do I do next? The insurance company is incentivized to help you as fast as possible in those scenarios because it helps them control the claim and puts them in a position to possibly pay less on that claim. If they can act faster on those first party responsibilities that you have when you have a breach, it's better for them and it's better for you. So there are things you might be responsible, like notification costs to people affected, which is required by regulation. It's different state to state. It could be credit monitoring. I have it listed here. If you lose income due to having to halt operations for a certain amount of time, business interruption, there are other things. You see breach response. It could be data recovery, forensics to figure out what went wrong, public relations issues. The faster that the insurance underwriter can get their hands on the situation, the better it is for them. So they're also a resource. They're not just an insurance company at that point. When you have a breach, you call your broker, we get you in touch with the insurance company immediately, and they will take immediate action. So I think that's a huge value of a cyber insurance policy that might be a little bit different than others because of the timeliness that's required to respond to these kind of things. Rounding out the first party conversation, you see things like extortion, ransomware, social engineering, ransomware on there twice. These are all kind of those value adds, how the underwriters further make their form more comprehensive and competitive against their peers in the industry, right? So social engineering is probably the most common one you might see, might call it phishing, but hey, we're going to send you a link, click this link, and some employee clicks it and they get into the system and steal data. I get text messages all the time from our CEO, and he signs it off Benji Markov at the bottom. And I'm like, Benji doesn't text like that. That's weird, but not everybody might have that similar response, right? So there is risk there. Again, that's a first party type of exposure. But the key that I want to make clear here again is that it's a resource, right? What do I do next? If you have the insurance, call your insurance company. They're incentivized to help you. A little bit about the underwriting approach. I think, again, this is a little bit different than what I just talked about D&O, and I'm going to try and move a little bit faster here. But number one, culture and awareness, right? I just gave that phishing example. That is huge, especially if you're a larger company, making employees very aware of the protocol. If you get this kind of weird email, this weird text message, what do I do? Usually, by the way, the response is ask somebody before clicking anything, but the awareness prevents that quick click, right? So creating that culture is really important to mitigating risk. Underwriters will ask things like, what programs do you have in place to create that awareness? What kind of communication do you have? What kind of training do you have internally? It's a really easy thing to do, but also a really possibly detrimental thing to miss, where again, it's super easy to click on a link and that creates a lot of cyber risk. What kind of controls do we have in place? This becomes almost a prerequisite these days because there's so many resources out there to have the right cyber risk controls. Have it listed here: multi-factor authentication, endpoint detection, encryption, antivirus. There's more. If you look at any cyber application, there's going to be a whole list of these things, and we're going to tell the underwriters what we have in place. We can't offer these services. We're not a cybersecurity company. We're an insurance company, but we do have partners that do that kind of thing, right? An MSP, a managed service provider, there are companies that are out there to put this type of infrastructure in place and handle that kind of stuff for you. A lot of companies can do it themselves. They might hire a CISO or something like that. But again, talk to us, talk to your insurance broker. If you are having a need for these kind of services or having trouble getting cyber insurance because you don't have these policies in place, it's something you should look into. Insurance is not the only important thing for cybersecurity. These controls are really important too. We stress that to all of our clients, and we have partners that we can introduce them to if there's a need. So something to keep in mind even outside of the insurance realm. And then backups and recovery, right? It's another one of those controls. But as it said there, you see it in the news all the time, breaches happen, right? What do we do if that happens? How do we continue operating our business? tried and true backups are really important there, right? We can respond to the claim, we have coverage for it, but if something happens, you need to have the ability to keep operating your business. That's on you to have the right backup plans in place, right? So a little bit past the cyber insurance stuff and more what you can do, which the underwriters want to see to also protect yourself a little bit. And again, there's some guidance that you can get from an insurance broker, but also there's service providers out there that can help kind of drive that for you.
So obviously, we're going to have a lot of portfolio companies here, member companies that are interested in how do they pursue next steps. And I think specifically, what does Founder Shield offer, compared to what else is out there?
I'm glad you asked, Casey. It's almost like I planted you in the audience
Yeah.
for this question. So we are an insurance broker at the highest level. That's like any other insurance broker. We represent our clients in the open insurance market. Like I said at the top, this can be complicated. Most insurance companies that insure businesses outside of your mom and pop or Main Street type business, and they will insure you, but you might be able to get something from Progressive or State Farm or something like that. Outside of that, if you are a company looking for capital and funding, typically you're outside of kind of that appetite. Most of these insurance companies won't work directly with businesses, and you've probably never heard of a lot of them. Doesn't mean they're not massive, stable companies. It's just how the insurance market operates. So a broker like us, we represent our clients, not the insurance companies. We're not an agent of them. We are your representation in the marketplace, providing you consulting and guidance, and that reach into the market, negotiating and shopping on your behalf for the right products. Where we are a little bit different is that we kind of find ourselves in the middle ground of insurtech and professional kind of traditional broking. There are a lot of big insurance companies, brokers out there who have operated for a long time, and they're really good at what they do. My opinion is they're a little bit behind on the tech and kind of efficiency side. And same with more pure insurtech companies. They're really efficient, a lot of them automated, but they are not going to get hands-on with their client and give them that kind of guidance and support. They're meant to be kind of quick, one-stop shop type of stuff. We sit in the middle, right? So going to skip a slide real quick. Our platform makes the process of applying for and managing insurance much easier. You don't fill out PDFs anymore. All of the questions are tailored to be understandable by our clients and easy to answer. And what it does on the back end is pre-fill real insurance company applications, whereby we would take those and get our hands on them, work with you to create a strategy, and go to market to craft a tailored insurance program. So your experience up front with us is going to be much more efficient and in line with an insurtech. The behind the scenes work that we're doing and the end results is more in line with what a traditional broker who's stronger on the professionalism and client servicing side of things would be able to deliver. We specifically target high growth companies because they may have been working with an insurtech company at the early stages, which might be fine. So off the shelf products, a little bit more simplistic, but as they grow, they might be too small for one of kind of the big three insurance brokers who are, again, very good at what they do. They're that big for a reason, but you might not get the level of service or attention. We want to be that growth phase broker for our clients, right? It's time to graduate to a more hands-on experience. As I grow, as I raise capital, as I hire employees, sign new contracts. But I also deserve dedicated priority type attention from my insurance broker, which we're in a position to do while some of the larger brokers may not have that capacity to focus on companies who aren't a certain size yet. So that's how we position ourselves. It's a little snapshot of the platform. Nothing's automated. You're not going to get an off-the-shelf quote. I'll be honest about that. We don't believe in that, but it will make your experience a lot more efficient and set us up for success for crafting that tailored insurance program. Going back real quick, again, just our process. This kind of conversation is pretty similar to what we have with our clients. Again, it's all about that communication, building that roadmap and understanding of the business and trajectory. We'll do that. You experience the platform, submit applications. We'll review quotes with you. We bind coverage. It's very straightforward and simple, but it's efficient with our platform and it's comprehensive from our perspective to set you up for success for a scalable insurance program. Ongoing services, you might need insurance certificates, you might need reviews of those contracts or the requirements. We do have claims management team like any broker should have. That's what the insurance is for if you have a claim. And then obviously if we need to adjust along the way, we are very hands-on and available, do constant check-ins with our clients. The nature of our clients being growing companies, changes happen all the time, right? So being proactive about those, communicating again is really huge for that. Something that we take very seriously. So again, there are a lot of good insurance brokers out there. We may not be the best fit for every company, but partnering with Founders First, working with companies who are looking for a capital raise in one way, shape, and form, those are who we are a good fit for, and we think those types of clients are a great fit for us. So it's a natural relationship for us to meet Casey and the team and do these kind of things together. Whether you're with an insurance broker or you want to have your first conversation about insurance, reach out. We're happy to. You don't have to pay us anything to talk. We are happy to offer support whichever way we can. So I'm going to skip this slide. I want to open it up to Q&A. Some quick tips. We'll send it out. I probably talked about a lot of these, but that's it. Thanks, guys.
Yeah, let's keep it on this slide so everyone can get our email addresses here. You feel free to reach directly out to Justin, or if you want to keep it in the Founders First family, you can reach out to me and I can connect you to. I know I'm connected with a lot of you out there. And then just going through the questions here. Oh, it looks like somebody asked if we were going to get the slides. I know Bobby's on supporting us on the Founders First side. We'll make sure we get this out to everybody that joined here today. And then Jesus is asking about surety bonds. I don't know if there's anything specific there, or if Justin, you wanted to jump in specifically.
Yeah, I mean, surety bonds are really easy. They're very inexpensive. They a lot of the times cost like $100 or $300 a year. There's a few markets that do them. It's a pretty simple, like 1 or 2 page application. Just understanding the exact need for it, the nature of your business, who is requiring it. It's important to have a conversation just to gain that understanding, but they're very easy to handle, inexpensive. It's usually a check the box kind of item on a contract. So if that is something you see on a contract, let your broker know, come talk to us. That's a super easy one to knock out. Could be reflective of potential other requirements you want to be mindful of from the insurance front. But that's simple. It's probably, I don't want to oversimplify, but the good news is it should be a piece of cake to knock out and a pretty low cost.
Cool. Anthony has a question here just on industry fit. So do you cover group homes or residential care homes?
So I'm going to be honest, not necessarily our area of expertise. But however, and I don't have a slide in here, I probably should have. We were acquired about 2 years ago by a company called Baldwin Risk Partners. They are publicly traded under BRP. They're an insurance kind of holding company that builds a network of different types of insurance providers. So we have a sister company that does health and benefits. We have a sister company that does personal lines and captives. We have a few sister companies within Baldwin Risk Partners that does commercial insurance like us, but in different areas of expertise. So anything like that, I would like to have a conversation to understand more about the business. If I'm not the best fit, I will let you know, but would introduce you to somebody who has that area of expertise. One of the reasons we went forward with that acquisition, a lot of resources through that network, including be able to better serve our clients where we might not be the best fit for that. So worth a conversation. If you'd like to reach out, I'd love to learn more about it. And then whether it's myself or somebody else within our family of BRP companies, we'll get you taken care of.
One way or another, we'll find a good home for you, right? That's
Yeah.
I love that. And Justin, I was just thinking about it. Looking at insurance like this is very new for a lot of our members here at Founders First, but obviously a very necessary step for growing businesses. Is it okay for businesses kind of like, dip their toe in and start with a little bit of coverage, kind of get a sense of where they need to go before taking like the full package? Or, do you recommend, trying to get as much coverage as possible as soon as possible?
No, for the most part, it's like a little bit a la carte.
Yeah.
There are some like package coverages out there. Your tech errors and omissions will be packaged with cyber most of the time. D&O might be packaged with employment practices liability, but those are kind of related coverages, right? For the most part, if you have a need for 4 or 5 different insurance policies, in all likelihood, it's going to be with 4 or 5 different insurance companies. Again, this is not
Yeah.
a hey, like call, no disregard to State Farm, but this isn't a call State Farm and like get whatever policies I need. We are crafting a tailored insurance program. And we'll do that as those needs arise, right? Just because you sign a lease doesn't mean you have to buy cyber insurance yet, right? If you take out office space and the lease has a general liability requirement, we'll get that in place and we'll get the cyber when you're ready for it. It's all about that kind of early communication and building that roadmap. So we will recommend some things that we might feel strongly about. Budget also comes into that, right? We might be given a budget by the client and say, hey, this is what my budget is right now. We're going to prioritize certain coverages over others and kind of do that analysis to make sure we protect the client as best as we possibly can within their budget constraints, and then build from there as new things kind of come up or budget expands or whatever it might be. So it's different for every company based on their stage and what, there are coverages I might die on the hill and say you absolutely need this, but we can pause on that one if we have to. So it's very much a fluid thing. We prepare for that with building a roadmap together to structuring a cohesive insurance program, but it's on a timeline that makes sense for the client for sure.
Yeah. And then lastly, we have one more question here before I wrap things up. I'd love to let people go a few minutes early, but sorry if I missed it, but does Founder Shield offer a project gig-based insurance product that would cover contractors?
Ensuring the contractor themselves is difficult. Typically, the markets that we work with aren't interested in that type of risk. It's a little bit too small for them. We do insure marketplaces that utilize 1099 contractors. So we have on-demand babysitters and flower delivery and oil changes and all these things that gig workers might do. We do a lot of ride share, that kind of stuff. So ensuring the platform that has these contractors is something we do. For the contractor themselves, as individual personal coverage, that can be harder. There are outlets, and the InsurTech outlets that I was speaking about before are great. They just aren't always a good fit as a company is growing, but they could be an outlet for something like this that is a little bit more straightforward, for a specific individual doing a specific thing where the actual risk profile isn't as complex. So reach out to me if I can't help you. Similar to what I said before, it might be a peer in the industry, but there are outlets built for that that are great. The markets that we work with necessarily aren't, but if I can't help, again, I'd try and be able to send you in the right direction.
Cool. Yeah, makes sense. And then Lindsay chimed in on chat here. She's late. Is there going to be a recording? Yeah, we are recording the webinar. So we'll make sure. Hey, Bobby, I got you on here. Can we make sure to send out the link to the recording along with the deck?
Yep, that'll go out right after the webinar.
Awesome. That way everybody's covered here. And then finally, I just want to say, as somebody who works with small businesses, who advises small businesses, and really helps set small businesses up for growth and scale mode. Even if you're just somewhat interested or want to learn more, I mean, I would highly recommend all small business owners go through some type of evaluation process. Speak with somebody like Justin, if not Justin himself, because they're really going to set you up for where you need to go. Like these are things that you need to take care of, sooner rather than later. You're going to have to anyway. So you might as well work with somebody like Justin, who is going to use a tailored approach to make sure that your business has what it needs. So, thank you very much, Justin, for joining us here today. Great presentation. Like I said, I just think it's really important, that businesses have this information at their fingertips. Any last closing remarks, or Bobby on your side, any housekeeping items here?
Nope.
The last thing I'll say, and I said it before, and to your point, Casey, whether it's me or somebody else, have the conversation. It's worth the time. At the very least, just to have an understanding of what you need to be thinking about, even if it's not the right time to make a move or there's an action item. So that's my parting piece. Have the conversation, have at least that first step of preparedness around this stuff.
Great. All right. Well, thanks again. You know, like we said, you've got your information right here, so please feel free to reach out. We'll send all this out here after the webinar, and we're looking forward to chatting with you all soon. All right. Thanks, everybody.
Thanks, guys. Thanks, everybody.